engulfing the previous body of the 4-hour candle. This is hopefully going to give you the lowest point of the day, which means your stop loss can go at this low. Your entry would come at the end of that 4-hour candle. Now let's say we're bullish in this scenario. You realize.
So this is Tom Camp explaining about his 4-hour candle manipulation before price giving you a certain move in a certain direction. And I took that idea and placed it on the weekly time frame on XAUUSD, and I saw something beautiful. I saw it playing out. Okay, I didn't watch it live playing out, but I can tell that it is something that played out really nicely, and somebody would have been able to catch a 3000 pip move. So let's talk about that. This is XAUUSD weekly time frame. This is where the weekly candle manipulation happens, and this candle closes as an engulfing to the upside, right? And so many confluences are right inside this thing to tell you that the price is going to eventually go up. Now the next candle, weekly candle, opens right here, and from this point is now where you want to look for trading opportunities. But for my trading opportunities, for me, the way I've modified it is I want price to retrace the discount side of this range that has been given to us by this engulfing candle that has given us that also manipulation right there. So now that's the weekly time frame. Go straight to the 4-hour time frame and see what is happening there. So in the 4-hour time frame, because I have a demand for price to come to the discount side, I want to ask myself, why is price likely to react off from? And you can see on this discount side we have two levels. We have this fair value gap, and also we have this order block right away. So this is an order block valid because you have a breakaway gap right there. Now the moment price comes to this order block, you can see it gives us a reaction from that level. The way I trade fair value gaps and order blocks is I first wait for a reaction from that area of interest or point of interest, and the reaction I'm looking for is an engulfing candle, and that is what we see here in the 4-hour time frame. And something interesting that happens around here, you see what happens in the higher time frame has also happened in the lower time frame. So that tells you that price is fractal. So you can see we have a 4-hour engulfing candle coming from this order block, and this 4-hour engulfing candle does the same thing. It gives us a manipulation of the previous 4-hour candle and closes as a bullish engulfing candle right there. And right there, that is where now you want to take your entry, because range higher, range low of this zone, and now you want price to retrace the discount zone of this range, and you get into buys. Actually at this point you can get straight into buys right here, stop loss below the engulfing candle, or even below that order block right there, which is slightly just below that. And then now you are targeting whatever you want to target, maybe a 5R, a 4R, a 3R, whichever you want to target. So you can see even up to this swing high right here, which was prior to the reversal, it gives you a very good risk to reward ratio of 5.89. Now let us take this a step further and refine this entry in the lower time frame, which is the 15-minute time frame. So for our 4-hour time frame, I skip straight to the 15-minute time frame, and now refine that entry at that level. So let us check. I still have access to the data. Yes, I still do. So you can see in the 4-hour time frame, we have a manipulation in the discount side of the range, and also price closing as a bullish engulfing candle right there. So you can see this, the first manipulation was here and the second one was here, but this one is just a wick. So the moment it closes, you want to get into a buy, and you want to get a buy from that, around that level. And stop loss, it can be below this level, or it can be below that the previous candles that were manipulated like that. And the thing you need to notice about this is price manipulates that low and taps into an inverted fair value gap right here. So this becomes a very refined entry with a very tight stop loss. You can even place it below that swing low with a very tight stop loss, and now you have very good risk to reward ratio if you plan to swing trade or this trade to hold maybe for an entire week or even an entire pretty much the entire week. This setup ran for almost 2 weeks. So this is from Monday, July 20th July of 2026, and now we are in August, 5th of August 2026. So you can see it's almost 2 weeks, and price has been moving nicely. So that up to that level you get a 16.6 R. Now go back to your weekly time frame and now map out your target using that weekly time frame. You can see the first TP is this relative equal highs from the weekly time frame, and also this high here from the weekly time frame. And you can also come to the daily time frame and mark out more other levels where you can assume that this is where price is going to go to. So I can even take this level right here, and the 4-hour time frame, I think there was another 4-hour time frame level, this order block right here, and that order block can also serve as a TP, and also this level here can serve as a TP. Actually that was mitigated, so that can serve as a TP, but this level can serve as a TP. And you can see the various stop losses, 18.23, and also you have 24.27, and also you get this is 30.12 R risk to reward ratio. And that is how easy it is to formulate an idea around what Tom Campus has shown us, or has shown to the people. So that is the basic idea behind it. So take the 4-hour candle manipulation by Tom Camp and put it into the weekly time frame, also the daily time frame, and get opportunities to swing trade. But if you want to take intraday trades, then use the 4-hour candle manipulation or even the 1-hour candle manipulation for good scalps.